Hello again, people. Right, I just wanted to, well, first off, the power of these three CRs and the RsiHisto break and close is, in my opinion, pretty amazing. And when you're considering entering a trade, you should always think about that. And the only way you can build up your confidence in a particular chart pattern and possibly an indicator is just to either trade it, demo or a small live account, or spend hours and hours and hours just looking at charts, which, to be fair, I've done for years and years and years, and thousands upon thousands of hours of chart time, and it pays off. And the reason I'm reverting to drawing a lot of these ascending and descending trend lines is because I want you to realize that, really and truthfully, you don't have to stress, that's not the right word, but you don't have to focus on the minutiae or minutiae, however that's properly pronounced. All you have to do is think of the confidence that you've got in the RsiHisto break and close down, the confidence in breaks of trends, and all the other various stuff that I talk about on here, support and resistance, 3-candle reversal, so on and so forth. So, but what you must categorically understand is how to draw the lines as I see them. So, an uptrend, and this, a lot of people miss this, and I did for years. Martin Pring was the guy, I think, that did a series of low, high, higher, low, higher, high as an uptrend, and then you'll see his as nice, smooth, swiggly lines, and he'll talk about higher highs and higher lows and so on and so forth. So look at Martin Pring, plenty of PDFs on him online. If I can dig one out, I'll tweet about it. But it's important to remember that you can't connect this line to this line, or this low to this higher low, until this high is broken. Once that's broken, you've got a 1, 2, 3, you've got a trend. Okay? And as such, the uptrend isn't broken until you can do the same. This low, categorically, must be broken by the price over this side before you can attach those two high to the lower high. Okay? That is the god of drawing trend lines, as far as I'm concerned. So you'll get people that draw trend lines all over the place, but in my opinion, that's how you must draw them, and Martin Pring's as well. You must have that low broken by even a couple of pips, but it's best to check on the line graph all the time, just to because it may well actually validate itself well earlier than a spike down, because this may well have been a spike, and the close or the mean average or whatever these line charts, line graphs are, I should look them up really to get the precise answer for that. But I was always led to believe they were the closes, but I don't know that categorically. But there we go again. Once that high is broken by that is a valid trend line. Once this low is broken by price, that is a valid trend line down. And once you can draw those properly, all you have to do is wait for your 3-candle reversals and your RSI bust, pullback, break and close. And that's it. They are all over the place. So you can draw them everywhere. You can draw, you've got a valid uptrend here. That high was broken here. So we can draw these two together, this whole lot here. And then once we can draw a high, low, lower high, and break of that low there with a confirmed reversal. Once we get the with a 3-candle reversal, once we get the RSI break and close, Bob's your uncle, we can hit that short, and down it went. So that's how you can use this with a little less a less anally retentive way of looking at the charts. Simple trend line breaks and the use of 3-candle reversals and break and closes. So I'm always looking for ways to make this easier, guys. I hope what I do by adding these different sort of quirks isn't making things more complicated. The idea is to make it less complicated for you, and then just give you the ability to see more and more trades, potentials, and just watch what happens. The MAs are brilliant. They're always going to stay on the charts. I'm sort of OCD about price action, which is why I developed the method I did. But you know, these have been around. Ascending and descending trend lines have been around since charts began, even on paper. And you know, this here, once again, to do the line properly, this low has to be broken before we can join that to the two lines. So it was validated when this low was broken here by price here, so you would have struggled to get into a potential trade. Having said that, you know, it's on an H4 chart, so let's put the line chart on there and see what actually happened without overcomplicating things too much. So once that price was broken there, this won't snap to that level, unfortunately. We can move it up though and see what happened on the lower time frame. And that's what you do in normal circumstances anyway. Drop to the lower time frame and then just watch price action, watch the break and closes, keep going down the time frames. And there's a break and close there. So bust, down, pull back, break and close, and it gets you into a massive move down. So, you know, ascending and descending trend lines, here's the internal one to that whole business there. Low, high, break of the high, that's an uptrend, and high, low, lower high, lower low, that is definitely a lower low. That is a new valid downtrend, and that's how trends within trends work. This is a new trend break within the massive H4 trend that we drew, these two lines here. And that's how it works, trends within trends. Thanks for watching. I hope that helps a little bit.